Thank you for joining us today in Connecticut Real Estate Weekly, sponsored by Ready Set Loan Team. My name is Madhu Rendu-Chatala. I'm here with attorney Jason Doucette. Jason, would you like to introduce yourself?
Yes, Jason Doucette, as you said, I'm an attorney, office located in South Windsor, primarily focus in real estate transactions, pretty much have for my whole career, which is about 20 years or so now, a little over 20 years. Seems like just yesterday I graduated law school.
So yeah, we got into this around the same time.
Yeah, 2003.
Mhm.
I used to I worked at some large firms and focused mostly on commercial, but really for the last 15 plus years, been doing mostly residential and some small commercial as well. And also have a second sort of part-time job, if you will, as an elected state representative for the 13th House District, which is Manchester, where I live, and part of Glastonbury, where we are right now. And been doing that for about 7 years, and sort of relevant to, I think, what we're going to be talking about today. I chair the banking committee in the legislature and have done that for most of my time there. And I'm sure we'll get into that.
Yeah, no. So I do want to talk about the your role as state legislator. What kind of policies is the state looking at to kind of address the affordability crisis in Connecticut?
Yeah, it's a very hot topic, has been for several years. There are a few things that are unique about Connecticut, but I guess the first thing I'll say is that, it's a nationwide crisis, if you will, that we're experiencing right now, both in affordability and inventory. And we talk a lot about inventory here in Connecticut and the lack of housing inventory. It is a problem nationwide. Although there are a few things that are unique to Connecticut, are localized control of planning and zoning, the theory goes, has really stifled the growth of housing, new construction of housing units, because of our, sort of idiosyncratic way of local control of planning and zoning. There are towns that are more welcoming to housing, particularly multifamily housing, but also, single-family subdivisions and things like that, and some that are maybe a little less welcoming. And that's what the debate has sort of focused on, leading up to most recently a big omnibus bill that was known as HB 5002 that was passed by the legislature this past June, but then was subsequently vetoed by the governor, who heard a lot of concerns from, folks, many of whom were sort of clustered in Fairfield County communities, who didn't like the changes that bill made to local control of zoning. So we're sort of back at the drawing board of trying to figure out a way to encourage the development of housing, certainly in a sort of responsible way that all towns in Connecticut can hopefully get on board with. So as of today, end of September 2025, we are talking about going into a special session next month to maybe have a housing bill that is one that is a little more palatable to the legislature and, more importantly, to the governor, who vetoed the last one. So stay tuned on that. But the idea is to produce more units of housing, which we desperately need.
So actually, that kind of brings me up to like plans of conservation and development for like individual towns. Is the state looking at more of a taking more of an active role in some of these things?
Exactly. Yeah. That seems to be the solution. There are some politics to this. Again, I believe that yes, there has to be a little bit more balance. And as a state, we should set forth policies that the towns can follow. But it is a balancing act to try to preserve some of that local control, which is very unique to Connecticut, like I said, but also try to promote some pro-growth policies from the state level.
So there's a program that the state came out with a few years ago to kind of help address this crisis. It's called the Time to Own program.
Mm-hmm.
Are there any other initiatives coming up like that to kind of help further fund that? Just because, some of the customers that we run into, it's everyone, we have to qualify within an inch of qualifications just to, get a home, and it's one of those things where, eh, anything that like you can do to kind of save people like $50 here and there, it's literally the difference between qualifying and not qualifying. Is there any other state programs like or anything that the legislature is talking about that could help address this?
Yeah. There are a few. I mean, the time to own is the big one, the big initiative of the last few years from the state CHFA. It's been very successful. In my capacity as chairing the banking committee, I've done a lot of work with CHFA, trying to make that program more accessible and to try to provide more funding for it. Because as folks who are active in this market, realtors and loan officers certainly know, the program has actually run out of money. The demand for it has been incredible. So I have worked hard to try to make sure that the funding is there. We have sort of a clunky process for funding those types of initiatives here in Connecticut. It's got to be approved by the legislature, but then it's got to be allocated by the State Bond Commission, which the governor controls. So there's been some hiccups in that, which is why there's been some disruption in that funding. But that program has been very successful and is now sort of widely celebrated in the legislature and in the governor's office, and it's been great. But in terms of other programs, we're always sort of looking for new things. Not in the single family retail housing market, but there's a program called Build for CT, which has been very successful in building multifamily large apartment.
Like 5+ units.
Complexes, yes, right, exactly. And then there was one that I worked on just this last year, which is lots of little cute names and acronyms. This one's called the Build for CT program, which is just going to be rolling out later this year. And that is geared more towards the single family housing market. The idea, like the Build for CT program, this one's called the Homes for CT program. It's going to provide developers with low-cost capital to try to construct more housing units. So the idea is these would be loans for developers to help encourage the production of more single-family housing, small subdivisions, and they would then be creating more units that would be available for end users of the CHFA programs, like the Time to Own program. So we're looking at things that are sort of in the sweet spot of what we call affordable, but really sort of the beyond what we would consider to be, sort of deeply affordable units. And these are more, we would colloquially refer to as starter homes. So we're looking at, small single family condominium units. So that's what we're trying to spur the growth of that market by this new Homes for CT program. But it's, again, just rolling out now. Yeah. So hopefully we'll start to see some of these units getting built and coming online maybe later next year.
So that's kind of one of the things that, we've always had like not say an issue, but building in the Northeast, where every inch of land is already developed, it was like we have these other unique, situations where it's like, in say Colorado, it's like you can build because everything there isn't developed, you can build in New Mexico, like here it's really difficult to build, especially when you have like zoning and grandfathered clauses.
Yep. And it's a regional thing too. I think the Northeast in general, like compared to some places like Colorado, like you said, growth in new, housing starts and new construction has been stagnant. And then you layer that on top of, like we said, sort of the zoning challenges and things in Connecticut. So, but I'm hoping we'll see some movement on it, like I said, with programs like this next year.
Yeah, that'd be great. Looking forward to that. All right, let's talk about property taxes. Mm-hmm. That's obviously one of the big drivers of affordability. With revaluations going on now, sometimes, for the first time since COVID, people are getting a little shocked by how much their taxes are going up.
Yeah.
You know, I know that there has been some, trying to figure out how to lower property taxes, how to lower those taxes on everyone.
Yeah.
Maybe funding education more or something like that. Is there
Yeah.
anything that the state can do to help? I know taxes are driven more at a local municipality level, but is there anything the state can do to help those municipalities?
Right. Well, no, you mentioned one. So, the state funds municipal government for certain things that municipal government provides. The biggest one is education. So, those are examples of things that the state can fund to help try to lessen the pressure on the municipalities to levy, that rate of property taxes. For instance, this year we did have a major initiative for special education, which we hear from municipalities is a huge cost driver for their budgets and thus becomes a huge reason for property taxes to be as high as they are and to increase year after year. So we're providing more funding for special education starting this year. And again, we've sort of equalized the educational cost sharing system, which provides most of the education funding to the towns to try to give towns a little bit more. Those are the types of initiatives I think that we need to be on top of in order to lessen the pressure on property taxes. But you're right. Another unique thing about Connecticut is you may often hear, "Oh, we have the highest or third highest property tax burden generally in the country," and it's because of those local property taxes. A lot of other states out west, they fund county government, which provides a lot of the services, but we have 169 small towns all trying to provide the same services. A lot of overlap, a lot of opportunities for consolidation,
like regionalization
of some of those things. Regionalization, yeah, that we talk about from time to time. Those would certainly help. But generally, yes, from a macro level, the more we can fund things through state government that are municipal services like education, theoretically, the better it's going to be for property taxes. We also talk a lot specifically about the motor vehicle tax, which is very unique.
Yeah.
There are very few states in the country where you're paying a tax on your motor vehicle. And that specifically, we try to do things from year to year to sort of tweak that and keep those property taxes down. But yeah, it's a big burden for Connecticut taxpayers,
Yeah.
and something we're certainly conscious of. But it's a tough nut to crack.
Yeah. So, are there any programs, or is there any ideas that that are being worked on in the legislature to actually encourage people to move to the state of Connecticut?
Yeah, there are a couple that I worked on, actually, specifically related to the housing market, like tax credits for employers who are trying to recruit employees to help. We hear a lot from employers, particularly mid to large employers, that that's one of the reasons that they have a hard time maybe recruiting talent to Connecticut is the high cost of housing. We've provided things like tax credits that employers can pass through to their employees to help, say, pay for student loans. But another one that we've been working on is a first-time home buyer savings account tax credit. Interestingly, that piece was part of the HB 5002, which I mentioned earlier, and was a sort of a standalone piece of legislation that we moved in the banking committee for several years. This year, we actually managed to get it passed as part of 5002, which has now been vetoed. But this piece will be coming back in the new version of the housing bill that I mentioned may be coming out next month. And so what this is a savings account. So it sort of works like a 529. So you as a first-time home buyer can start saving for a deposit or a down payment on your first home. So you go to a Connecticut bank, you set one of these, or credit union. Don't want to forget the credit unions. And you can establish one of these accounts. start saving into it, and you get a tax deduction like you would, again, for 529 for college, which people are familiar with.
Yep.
The other cool thing about it is that the employers can actually provide. So say, again, you're trying to recruit a new employee to Connecticut. They're saying, well, geez, I want to buy a house, but it's pretty expensive where we are. The employers can actually contribute to that account as well.
Oh, so it's like an added benefit
on your behalf,
that you can
and then
choose
they
to
get a
defer,
tax credit as well for doing that. So, so that's a new program again that should be coming out hopefully next year.
Oh, awesome! That's actually really cool.
Yeah.
So speaking of education and 529s, kind of brings me into my next point. Like I was on the board of education for my town, and one of the things that people on both sides of the aisle could agree on was financial literacy in high schools and making it mandatory. Because right now, it is not mandatory.
Oh, it is. It is. Just passed.
Did it?
Yes.
Okay, great.
Yep.
Then I'd love to hear that. So
Yep, just passed. That was a new one. That was another one that came across. Our committee was involved with it. But it was really an initiative of the education committee. But yes, it is now. I'm not sure what the effective date was. If it was this school year, like this academic year, I think it was. But it was actually passed last year that it's now a mandatory part of a high school curriculum for some sort of financial literacy class.
great, because I can't tell you how many people I've talked to that don't know how to balance a checkbook, and
Yeah.
and you know when you say like hey, like what is it you feel like you can afford per month for a monthly
Yeah.
payment? I don't know.
Yep.
Well, let's talk about this.
Yep.
So great. I'm really glad to hear that that's changed.
Yep.
So let's put your attorney hat on for a second. What protections do consumers have if there's an issue with title after closing?
Yeah, that's the purpose of title insurance. So you get two forms of title insurance when you close on a home. You, the lender, are going to make sure that you're getting lender's title insurance to insure your mortgage and the value, up to the value of your mortgage.
Mm-hmm.
And so that's going to be mandatory for anybody getting a mortgage. In addition to that, you can get owner's title insurance, which protects the homeowner's interest from any problems that would later create an issue for you when you went to sell your property.
Can you give me an example of what those issues might be?
Yeah. I mean, there's a lot of them, and people think, okay, well, did you get a title search? So title's clear, right? But no, there's all sorts of things that can get screwed up in either the course of a closing, something that got missed on the title search, or something that gets created, during
Between a title search and closing?
Correct.
Yeah.
So a mechanic's lien is the classic example, and these are things that do happen. So somebody has get some work done on their home because they're getting ready to list. They had a contractor come. That contractor didn't get paid. They could slap a lien on your property just before, or sometimes even just after a closing. Now, because of the way the land records work in Connecticut, there are certain things that may affect your title, depending on when they are recorded. But there are other recording defects with your deed, things that may get screwed up, things that are supposed to get released at closing, but don't get released at closing. All of these things can create a major headache for you later down the road. And you think, okay, well, it's easy enough. We'll get the piece of paper, that we were supposed to get, but it's often not that easy. So
Right.
You're going to be in a position, if you don't have title insurance, of calling an attorney and maybe spending tens of thousands of dollars to deal with these headaches just so you can sell your house with clear title, which is going to be required because you as the lender are going to require your buyer to have clear title, right? That's why you get title insurance.
Sure.
So you just, it fouls up the whole transaction. I have one recent interesting story of a client that I worked with purchasing a property. There was a separate lot that they were purchasing from a neighbor. Okay, so it was a lot that was in between sort of two properties, a little sort of outlot. They didn't pay a lot of money for it, but they ended up buying this lot from the neighbor. About a year later, they get served with a lawsuit. Said, what the heck is this? Calls me up. Says, I'm getting sued, apparently. Well, it turns out that he was sort of a necessary party to this lawsuit that didn't really concern him. It turns out that the neighbor had went under contract to sell that same lot, that little landlocked lot, to another person. And that other person was now suing the neighbor and my client, the ultimate buyer of the property, because he now held title to the property. So he was sort of a necessary party in this lawsuit. The lawsuit was really about this contract that existed between the earlier two parties to purchase this lot. But because my client was a party to it, and because my client then held title to the property, it became his problem as well. And he had a cloud on his title of this lot that he bought. So in that case, it was a pretty small dollar amount that he purchased the lot for, but he had a policy of title insurance. He notified the title insurance company and formally filed a claim saying, hey, I'm getting sued. Would you defend me in this lawsuit, or how will this work out for him? It turns out in that case, they ended up cutting him a check for the full value that he paid for that lot. So they said, we acknowledge that we have to insure you for this matter. However, because of the value of it in that case, they ended up just cutting him a check instead of actually defending him in this lawsuit.
Because there's probably going to be more to
But in that respect, it's almost like a really good example of what title insurance really means. So the full value of that property that he had purchased ended up getting indemnified for that value of that property with a check in his pocket. Now, he still has to deal with this lawsuit. I'm going to help him through that process. But it's pretty clear that he's going to be able to still have title to this property. He was a bona fide purchaser of the property. But in that case, again, I think it's a good illustration of how title insurance really works. So the value of that property, they cut him a check, and he was able to be indemnified for any potential losses because he didn't have clear title to that property.
So the natural question now is, okay, well, if there's a lender's policy, why do I need an owner's policy?
Right, because you, as the owner, would not be insured. Your lender, if they foreclosed on the property, would be insured. They would get a check back for the value of their mortgage. If they were affected by some cloud on the title after the fact.
But if the
owner would
equity portion is gone,
get nothing. Yeah.
Right. Okay. Yeah. That makes sense. What happens at a closing? Sometimes things happen at closings. What happens if there's disputes about credits or something like that? What typically happens then?
Yeah. So it's probably my least favorite thing to deal with as part of a closing. I lean on my friends, the realtors, often to because they're walking the property, they have knowledge of what it is that was actually agreed to with the repair and so forth, to help to try to resolve those conflicts. Right. But the advice I can give you, that I give all my clients about these things, and sometimes, unfortunately, it's after the fact, is that you have to be very, very clear about what it is that you are agreeing to if it's a repair of something. Right. Oftentimes, it seems pretty straightforward. The realtors, if there's two realtors involved, they have a clear understanding of what each party is sort of looking for. They think they do, at least. But then they write it up in such a way that it is unclear, is open to interpretation. The classic example is, the seller will have the furnace serviced.
Right.
Well, the buyer thinks that means that the furnace will be serviced, and anything that needs to be fixed, anything that would need to be fixed is going to be fixed. Well, they go to the walkthrough and they find out that, in fact, it's been serviced, but it's still, isn't really, whatever this component isn't really working as optimally as it should be. So you got to be clear about those things and resolve them. And really, your time to do that is during inspections, when you're writing up that addendum. Certainly contact your attorney, to at least have a second set of eyes on it. Oftentimes, again, it's the realtors who are putting them together, and 95% of the time, everything is good. But it's always good to have a second set of eyes on that, and just know that time frame is really your, pretty much your only opportunity to address those issues. The only thing that happens at closing is, you're going to do a walkthrough of the property. If it turns out that something that was agreed to didn't happen, it's clear that it didn't happen, or there's some new damage. The tree falls on the roof, for whatever.
Right.
Those are the types of things that we resolve prior to closing or at the closing table. But anything that's a little, open to interpretation, or maybe you waived inspections, but you went to do your walkthrough and you said, hey, I didn't realize that, the furnace wasn't working. Well, you've waived your inspections, you've waived your right. Certainly you can walk away from the closing at that point, but that opens you up to liability and certainly
Definitely
losing
deposit.
your deposit,
Yeah.
that stuff's off the table. So yeah, you got to deal, my main thing would be, you got to deal with those things at the time of inspection and not, wait or just assume that everything is going to be magically resolved at the closing table.
Yeah. So last question I have for you, and thank you again for coming and being generous with your time. Wire fraud is one of those things that's on the rise. Like with people being reliant on smartphones and kind of smaller tech sometimes, like, things can get missed and, people end up getting scammed. How do you protect people from wire fraud?
Yeah. So my policy is that I will never ask a client to send a wire. And in our initial communication with our clients, we put them on notice of that. I feel that minimizing the amount of wires is the best way to prevent wire fraud. And for
The
those
old
folks,
school, certified funds.
oh yes, right. So that's primarily, when we have a closing in our office, I'm going to ask you to bring a certified check from the bank. And so I understand sometimes that's, folks have online only banks that don't have brick and mortar, so that can be a little more complicated. But for the most part, I like certified bank checks. Again, the reason for that is because there is so much wire fraud out there. There's so much phishing that, yes, someone will get an email. If you rely too much on your email, you can get an email from someone who you think is the attorney or the paralegal in the office or your real estate agent, but it's actually a spoof. They're asking you, to send the wire here, and it sends you wire instructions. Never, wire somebody money based just on an email correspondence. So we have
Call and verify.
We have at least 3 steps of verification. We have a software program that allows us to verify certain wire instructions. So we still do send wires when we're paying off a mortgage. We have a program that will verify that for us. We have a program that will send the instructions in an encrypted email to our client if there's absolutely no way for them to get us that bank check. And then again, there's like a 3-step process to verify that. So the biggest thing I can tell people is never, ever, ever send wire instructions based just off an email. You've got to go through the additional steps of verifying that those instructions are good, which are, verbal communication with somebody at a trusted phone number, obviously in-person communication with somebody. You have to be very careful because it is a nightmare to try to get those funds back. And usually there are many hours or even days that have transpired from the time that you've sent this, fraudster your money, and it can be almost impossible to recover. In some of those cases, devastating for people.
Yeah, it is terrible. I've heard just absolute horror stories. So, but hey, thank you again for your time. Appreciate you taking the time to come out. Be
Thanks,
good.
brother. All right.